Hello, everybody, and welcome to another episode of Ryan's Rules of Investing. My name is Ryan. I'm still investing, even though the markets right now are a little shaky. But speaking of shaky markets, what I'd like to talk about the topic today is how to never lose money in the market using what we call a trailing stop. Don't forget to click the like and subscribe button real quick for the other stuff on my channels, any updates that we have. Now, let's get going. You want to know how to never lose money in the stock market? Here's a simple trick. Use a trailing stop to lock in the profits. How do we do this? The best time to set a trailing stop is after your stock goes up. It follows the price as it rises, but if it drops by a set percentage, it sells automatically to keep your time or to keep your gains. Let's say simply that you buy a stock at $100. Once it rises to 120, you set a 10% trailing stop. Now, if the stock climbs to 150, your stop goes up to 135. So it's incrementally going up every single time the stock goes up. That percentage is locked in. So, but if the stock drops to 135, it sells, securing your profits. Why is this good? Well, a lot of times we don't have, the ability to watch the market all day, all night. We might set up notifications that a lot of us know about. Let me know when the stock price hits this or this. And what I basically know is that I do some research on the stock. I find out what the best trailing stop would be to lock in and do. And so let's say Meta, for example, I'll put it 25%. So once my stock is up over 25 or over 35% or 40% or 50%, I want to lock in those profits. But how much am I willing to let it go down, right, before it sells? So you could easily set that. So I'm only willing to lose 20% of the 50% that I gained, locking in the 30, or if you want to talk about net profits, that's another story or situation. But what it'll do is if I'm sleeping, if whatever, I'm not at the market, I'm not watching the market that day and it drops down, boom, it sells. Now, one of the things that you have to worry about is if you're going to trigger it too early or you're going to trigger it too late. Obviously, you don't want to set a stop to go down by 50% and you only have 30% profit into the stock. Clearly, you'd be losing money. What we want to do is make sure, and on the other side, of course, we want to make sure that we're not triggering it too quickly, right? Because as you know in my rules, I like to make sure that we keep the stock long term. I don't want to sell it less than a year, but if something catastrophic happens or something bad happens, I want to get out and take my money and run, right? That's really what we want to do. So we have to do a little bit of research. I can set another video on how to do that research, or you can always subscribe to my Ryan's Picks group and you'll learn in there what stocks that I'm going to end up buying for the day, which ones I'm going to sell for the day. And we do talk about trailing stops and other items in there, or other subjects in there, I should say. With a trailing stop, you let your winners win and you never have to hold on to a loser for too long. A lot of people get emotional and they death grip and ride that down until there's nothing left of their stock and say, oh, it's up 50%. Now I'm losing all this money. Bad idea. That's not an investor. That's a schmuck, as we call it, right? We don't want to do that. So anyway, if you have any questions or comments, please leave them in the section below. Again, don't forget to click the like and subscribe button. Join Ryan's Rules or Ryan's Picks. That's also a good idea. And before that, you actually buy Ryan's Rules of Investing. Buy the book, right? It's like $12, I think. It's not even that much, $27 maybe. The best $27 you're going to spend. That's like a drink, right, in America. One drink out is like $27. So go ahead, buy it, read it, get smart. Don't be stupid, and let's invest, guys. Talk to you guys soon.